When the IRS opens up a crypto audit, what mistakes do people make that instantly put people on their radar?
Yeah.
Most people think that they have a defense because they used an exchange or they used a wallet or they used some tax software. In your experience working for the IRS, what defenses actually work? And which ones are completely falling apart right in the
Yeah.
middle of the audit? So you were mentioning some very egregious cases and some lesser
Yeah.
cases. Why do so many crypto audits get kicked out of correspondence and get straight to field agents like yourself? And what does that say about how serious the IRS thinks the case is? So when somebody's cheating, like underreporting, I've had a couple crypto audits, or they're hiding crypto income. What are the red flags, the obvious red flags that the IRS sees immediately? And how far back will they go once they see them? So
Yeah.
what's the moment when a bad crypto audit stops becoming merely civil and starts becoming something else? Hey, BJ, how you doing?
Hey, how's it going, Josh? On
You were
business?
at the IRS for a while, huh?
Yeah, 23 years.
All right. So, first things first, I help people with IRS problems. I just got off the phone with a former IRS guy.
Okay.
I would love to go over some of the basics. Can you tell me a little bit about yourself? You said you retired
Yeah.
at 850 from the IRS.
Yeah. Yeah. I was with the IRS since about 2002. I started with SBSC as a revenue agent in Downers Grove, Illinois. Then I got a promotion to Chicago. Was probably about 2005 or something like that. And
SBSE, were you a TCO or were you an
I
RA?
was a revenue agent. I was a revenue
Okay.
agent. Now I
Okay.
moved to
So you went
Chicago,
out
to the
into the
city of
field or
Chicago for
what's
a
your
promotion, and a new group was basically stood up. It was supposed to be a part of the ATAD, Abusive Tax Avoidance Transactions group, but they eventually merged it with LBNI. When they came up with the Offshore Voluntary Disclosure Program, they made that ATAD group a part of LBNI, and I basically shifted over to LBNI to handle offshore voluntary disclosure cases for a few years, and that was starting in 2009, I think. Yeah, and I stayed there till for a couple of years.
How many years inside the IRS auditing crypto cases, specifically dealing with taxpayers who thought they were invisible? How many years were you doing that?
Started assisting cases, well, since about 10 years, I would say.
Okay, okay,
Well, I wasn't assigned cases, but I was assisting agents on crypto issues. So that's
okay.
basically that.
All right. So when the IRS opens up a crypto audit, what mistakes do people make
Ah,
that
uh,
instantly put people on their radar?
yeah, yeah. Like you asked earlier, what can they see? I mean, on one end of the spectrum, you see the IRS sees everything, and then there are people who say the IRS doesn't see anything. It's the answer is somewhere in the middle, and the fact of the matter is they don't have to know everything. They can. Well, what they really need is a clue that well, this guy is dealing in crypto, so let's pull him for audit. The initial cases that we got in the field on the crypto issues were coming from disclosures from the exchanges themselves. Back in 2016 or even earlier, the IRS filed or served a John Doe summons on Coinbase. That's basically well, they saw that a lot of people were involved in crypto, but they didn't know who they are. They didn't know who they were. They didn't have any records, so they served as John Doe summons. They got about 20,000 different taxpayers identified that way, and some of them were sent to the field. The most egregious
Okay.
ones, the lower tiered ones, were basically got like an education letter or a soft nudge letter. Hey,
Yeah.
we know you're dealing in crypto. You know you're doing something. Might as well, correct those tax returns. So
I
that's
had I had a taxpayer who will remain unnamed receive one of those letters from
mhm.
LBNI, a nudge letter
Yeah, yeah.
about specific tax years about unfiled returns, and so
Okay.
that was an interesting thing. Most people think that they have a defense because they used an exchange or they used a wallet or they used tax software. In your experience working for the IRS, what defenses actually work? And which ones are completely falling apart right in the
Yeah,
middle of the audit?
yeah. Well, I mean, you have to keep the records. That's the bottom line. I mean, some that really is frowned upon is like gaps in reporting. So you give the IRS some records, but not all. They have access to some of it, but it's all about credibility. I mean, if you give the IRS the records that they're looking for, you're reasonable, you'll be able to settle the case at the exam level. That's the
Okay.
bottom line. Yeah, the
Okay.
records.
So you were mentioning some very egregious cases and some lesser
Yeah.
cases. Why do so many crypto audits get kicked out of correspondence and get straight to field agents like yourself? And what does that say about how serious the IRS thinks the case is?
They get, well, actually, very few of them get resolved using correspondence alone. Very few
Okay.
of them that I've seen. I mean, most of them get kicked back to revenue agents because because of the sheer volume of records. I mean, if a taxpayer is involved in one crypto, we have to look at those records and find basically like follow the money principle. I mean, if there are any if you're given any, if those records that you have in your case file, they give you any clues that the taxpayer may have transactions somewhere else too. Like a lot of Coinbase records, there is a row there that basically says where the funds were received from or sent to. We have to look. We have to look at the blockchain, search those
Okay.
addresses, and if that address leads somewhere else, well, we have to request those records too.
So that sounds like still fact finding, but once it's in the
Very,
field,
very much so.
is the IRS still fact finding or are they already building a case?
Oh, they're fact finding. I mean, in most of the cases, let's say a case currently under audit is 2023. Sometimes they don't even have the records for 2023. They have records for 2017, but they know that the taxpayer was involved in crypto in 2017. Did he close that account? Probably not. So they actually
Okay.
summons, if the taxpayer doesn't provide the records, they summons the exchange and they get the records that way. And if the taxpayer is not cooperating, it really puts them in a bad spot because if he's trading, he's gonna get a zero basis in those transactions. I mean, you have to
Yeah.
look at the burden of proof. The taxpayer, if the IRS gets records from Coinbase or some other exchange,
Yep.
well, they know the proceeds, what the sales were, and that's the burden of proof that sits on the IRS. But
Well,
the
yeah, but
basis,
the taxpayer,
the
the
IRS,
taxpayer has to assert basis and support
yeah,
it with
exactly,
substantiation, right? All
exactly.
right. So when somebody's cheating, like underreporting, I've had a couple crypto audits, or they're hiding crypto income.
Mhm.
What are the red flags, the obvious red flags that the IRS sees immediately? And how far back will they go once they see them?
Well, let me answer the second question first.
Okay.
Because it all depends on the statute of limitation. The normal statute of limitations, 3 years. But if there is an understatement of income, 25% at least, they get 6 years. So they can go back 6 years, even if they don't have a firm understanding of what that income is. It's enough that they have a suspicion that there could be unreported income. They can open up 6 years. Now, the red flags. Yeah.
Yeah, yeah.
Well, the red flags, that's funny. I mean, first of all, lack of reporting entirely. I
Yeah.
see that a lot. I mean,
Okay.
the IRS has a lot of data, gets a lot of data, not only from exchanges, but also from foreign partners through some exchange of information agreements and things like that. So, yeah, if there is no reporting, but the IRS has information that there should be some reporting, that's the first red flag. Now, the second one, gaps in reporting. Like I said, the IRS has information from exchanges, but the taxpayer is reporting some transactions, but not all of them. That is a red flag.
Okay.
Also, DeFi activities like staking, airdrops, sometimes mining, and liquidity pools. All that stuff is taxable, and the IRS has a means to track that and find that information. If they don't see that, that is a red flag, and they're probably getting a letter.
Okay. So,
Yeah.
what's the moment when a bad crypto audit stops becoming merely civil and starts becoming something else?
Well, I mean, we're talking about fraud there. I
The F
mean,
word.
yeah,
Yes, yes.
yeah,
I have
yeah,
I have some colleagues who were considered special agents, and those guys in CID, Criminal
yeah.
Investigation Division. When do those guys get involved? What sorts of things have to happen?
Well, there has to
Or
be a tax deficiency. I mean, the CI is not gonna take a case with a deficiency of $20,000. There's got to be more than that. There's got to be 40,000, at least $40,000 for each year for them to even consider it. Then, of course, the badges of fraud. We'll talk about them. It's basically get in the taxpayer's mindset. What were they trying to do? If this was an intentional misrepresentation of facts, yeah, that smells like fraud to me, and
okay.
special agents could get involved there.